Just as low interest rate environments often prompt people to refinance their mortgages, high interest rate environments can prompt people to make some financial decisions that will have an equally large and long-lasting impact on their finances and retirement accounts. So today we want to talk about what some of those things are and decisions are that you can make that can really help you in this high interest rate environment.
Now, Amber, we say high, we're talking rates in the 5% range. And some people say, Corey, back in the 80s, they were double digits. I get that, that's high. But these are the highest rates we've seen in 15 years. And the reason we want to do this video is while we are at high rates relative to the last 15 years, we're going to show you in just a moment that most people are forecasting rates will be decreasing in the near term coming into the beginning of 2024. So we want to talk about what are some things you should be looking at or taking action on today before rates decrease again.
Okay, so Corey, we're talking about interest rates that have been climbing and climbing, it seems like, over the last few years. So how has that impacted sort of the financial environment, and what are we seeing and hearing from the experts about maybe possible changes coming to that?
Well, as we've explained before, as interest rates increase, bond values decrease. So that's putting some downward pressure on bond fund prices. But what the interest rates increasing mean is those fixed accounts. Think of CDs at the bank, fixed annuities, some of these guaranteed type investments. We're seeing interest rates increase on those. So I'll give you an example, Amber. Right now, you could go out and lock in a 5-year multi-rate guaranteed annuity at about 5.25%. Now again, compared to 1980s rates, that might not seem that great, but for the last 15 years, these are the highest rates we've had. And to project out, we're going to show a chart in just a moment where we are projecting interest rates decreasing. So a client might want to go out and take some of their money that they have allocated to bonds or sitting in a lower yield checking or savings account and transition it to some of these type of products that can actually pay some decent interest.
So let's talk about an example. Let's look at someone who maybe has $100,000 in savings. How would this work for that person?
Well, Amber, good question. Maybe that $100,000 earning 1 or 1.5% at the bank could be repositioned into a multi-year guaranteed annuity, paying, just use the 5% example for this. So 5% for 5 years. Well, that's $5,000 of additional interest income that they could have, whether it stays inside that annuity account or is paid out to them, each month as an interest payment. That'd be over $400 a month of interest coming in, and that would also help with some of the inflation pressures we've been seeing out there in our life today.
So is this good for a short-term investment, for long-term investment? What are we looking at?
Well, it depends. Maybe inside of a retirement account, an IRA, for example, if we're looking at a 5-year term and we're looking at a 30-year retirement, that's perfectly acceptable. If this is money you need in the next year or two, maybe not, because we are talking about a 5-year lock guarantee. We want that to produce income for the next 5 years. So maybe for the short term, not so much. Anything you need in the next year or two, that's not applicable. If we're out there a few years, maybe we can look at these 3, 4, 5-year rate locks. And then of course, inside of those bigger retirement plans, we can definitely go longer term.
So for those of you who watch our videos and are clients of ours, we talk a lot about the 3-bucket approach. So which bucket would this be in?
We would probably call this the income bucket, right? That safe, guaranteed bucket, money that you might need in about the next 10 years or so. This would be a very applicable solution for that type of account.
So we've been talking about interest rates. You're saying that the experts are saying interest rates are going down. Who is saying that? What are we seeing in the coming days, weeks, and maybe even years?
So Amber, I'm going to put on the screen here a chart. This chart actually shows in the light blue the historical rates where we've been. You see, just back in 2022, we were at 0.25%. Now today, nearing the end of 2023, we're up to 5.25%. So they did raise very quickly. The dark blue, starting in kind of the middle of the chart and going right, the dark blue represents the Morningstar forecast. And you can see they show rates decreasing beginning of 2024. There's also the black line there with the dots. The black line is the futures market implied rate. What do investors think rates will be going forward? And then the little gold star there is the Federal Reserve, the FOMC, the Federal Open Market Committee, where are they projecting that they're going to set rates? So all three of those are saying rates are going to start decreasing in 2024. And so that's why we felt the need to make this video, because we kind of want to know, where's the top, right? Well, it looks like for now we are approaching the top. The Federal Reserve announced they might raise rates one more time in 2023, but that would probably be it. So we are probably approaching the top of the interest rates, at least in this cycle. Now, we go out a few more years, we could be talking about it again. But for the last 15 years, we are probably approaching the highest rates we're going to see.
So for the savvy investor, now is the time to lock in those high interest rates on certain investments.
Exactly. On that safe money portion of your portfolio, this is a perfect fit to get some real return. And I should say, it's been kind of exciting, right? We haven't got to talk about interest rates being high and actually investors making some money on their savings for quite some time.
If you would like to learn how this might benefit you or impact your retirement, you can reach out to us at workwithnewgen.com to schedule a free 15-minute phone call.
This is just one way that we can help you make the rest of your life the best of your life.
Plan now to retire happy.